What's going on, guys? Welcome to the Boring Money Show. It's your boy, Mr. Boring Money. Today, we're going to be talking about the difference between the bear market and bull market investing and how to really think through the two and why understanding the difference between the two is actually really important for your survival when it comes to investing, especially in the blockchain. And really, this investment principle and this understanding is going to be useful in stocks. It's going to be useful in real estate. It's going to be useful when you're analyzing any kind of opportunity based on the market. Now, what I want to do is clearly communicate that this is not financial advice by any means whatsoever. All I'm doing is sharing what's worked for me, some of the investment principles that I've learned over the years. And this is for pure entertainment purposes. If you're seeking financial advice, or if you're have issues with your own portfolio, seek a financial advisor, somebody who's licensed and who's qualified to be able to meet you at your unique needs. This is just for educational purposes and entertainment purposes only. Now, contrary to popular belief, the bull market is actually the riskiest time to buy. Now, why is that? The reason why the bull market is extremely risky to buy and ape into is because there's a ton of greed and there's a ton of euphoria in the marketplace. And so when you're investing and deploying capital during a bull run, it's risky because you might be buying at the top. You don't know. You have no idea. You might be buying at the top. How many people have bought into, a great example is Dogecoin. How many people bought into Dogecoin thinking it was going to keep going up at like 70 cents and then it tanked to like 10 cents in a matter of days. The bull market is extremely risky to play in if you don't know what you're doing and if you don't know what you're looking for. The reason why it's risky is for the things that I just explained. My focus during a bull market is I'm actually taking profits as much as possible. I'm taking profits quickly. During a bull market, you can easily make anywhere from 5 to 10x quickly. And people get greedy and think that an asset is going to continue to go up and go up and go up. And what they start doing is they start forecasting their returns in the future instead of actually looking at the current returns that they're getting and how that fits into the goals that they're working towards. I've made this mistake. I know. I made the mistake of naming the puppy before I got it, right? I got into an asset and it kept going up and it kept going up. And I was like, okay, maybe this thing is going to be like $50. It's going to go up to like $100. It's going to go up to $200. And I was calculating my returns of what it would be when it was at $200. Now, for me, I did take some profits before it completely crashed, but I could have taken way more profits if I just calculated and looked at the returns that I was aiming to get. I reached that goal. I reached the returns I was aiming to get in that asset. The challenge was I was projecting further out of greed. And this is what happens during the bull market and why it's so dangerous. Instead of locking in returns based on the goals that you've set, people start chasing more and start chasing more for the sake of more with no clear direction. I've given into that euphoria. I've given into that greed. I've witnessed firsthand how dangerous that greed can be. So when you're investing in the bull market, understand the type of market that you're in. When real estate was really hot, it was overheating. Understand that if you're going to be deploying capital in a bull market, know what your goals are and what your exit strategy needs to be. How are you going to extract value from this asset if you're not able to sell it? Understanding what your exit strategy is and what the goal of your portfolio is and how this particular asset fits into the bigger goal of what you're working towards is going to be extremely important. If you don't have those things clearly mapped out, you are just shooting from the hip and you're going to get wrecked. It's a matter of when, not if, because you're being reckless. I know this for myself because I've been there. So during a bull market, especially when it comes to crypto on the blockchain, what I want to do, I need to produce cash flow first. The reason why I bias producing cash flow is if the market goes up, if it goes down, I always have a way to extract value from this asset. I listen to Warren Buffett when he says, be wary of the asset class that only has one way to extract value. All right. If you're buying into gold, and there's nothing wrong with gold, but if you're buying into gold, there's only one real way to extract value from gold. And that is you have to sell it to somebody else. Right. You can't really cash flow with gold. Right. It's a dead end. So for me, I bias cash flow and I avoid assets that only have one way to extract value. I avoid putting my principal into those assets first, right? So those are typically third sequences down the line. So my principal is going to go towards assets that are going to produce cash flow. And then the cash flow that that asset is producing will either go back towards in acquiring more assets that produce cash flow until I reach my cash flow goal. And then once I lock in that cash flow goal, the excess cash flow goes towards securing and protecting those returns. So that's when I may take some of that cash flow and roll it into gold. I may take some of that cash flow and roll into like Bitcoin. I may take some of that cash flow and roll into whatever next asset class you decided fits into your goal. So during the bull market, I am taking profits quickly. All right. I'm taking profits and rolling it into stable assets. All right. So during the bull run, when things were going crazy, I was getting 10x, 20x, 5x returns. I lock into profits, roll into stables, and just wait for the next opportunity. During the bull market, we're playing, especially in crypto and on the blockchain, we're playing with a lot of altcoins. We're playing pre-sales. We're trying to find the assets that typically lag behind Bitcoin when Bitcoin starts to pump, right? Bitcoin is the tide that rises all ships. So when Bitcoin starts to pump, a lot of the smaller caps and a lot of the smaller altcoins will typically lag a week or two behind Bitcoin. So when I see Bitcoin starting to pump, I'll just look for some of these other altcoins that I think and have a good idea that are going to pump with it based on the community and the excitement around that project. Right. And then as it starts to pump, I have my points at which I'm locking in profits. When I get to a 4x, I'm locking in profits. If it goes beyond that, I'm locking in profits, and I'm starting to just strategically take out profits during this bull run. Right. Now, contrast that to the bear market. The bear market is actually one of the safest times, in my opinion, to deploy capital. So my focus with the bear market is I'm investing in blue chip assets, because in the bear market, blue chip assets have a 5 to 10x opportunity when the bull rally comes. So I know if I'm investing in deploying capital into blue chip assets that have a ton of liquidity, that have a ton of backing, I know when the bull market comes, that's where the first wave of smart money is going to go. The first wave of smart money is going to go into these blue chip assets. All right. And now I can get blue chip assets at a discount. I'm still focusing on producing cash flow, but now my cash flow is going towards accumulating more blue chip assets, the ones that are at the discount. Now, the goal of the bear market, in my opinion, my goal of the bear market is to reduce my cost basis. Now, what do I mean by this? I'm going to use real estate as an example because it just a lot of the principles in real estate perfectly translate into the blockchain, actually. So let's say I bought a house for $200,000 during the bull run. And now all of a sudden, the housing market is on a decline And now this house is worth $100,000. But let's say I have a tenant in that house that was paying me $1,500 a month. Or let's just say they were paying me $1,000 a month, just to keep it simple, right? They were paying me $1,000 a month. So I'm making $12,000 a year off this property. During the bull market, I was only getting, what is that? A 6% cash on cash return. Now during the bear market, let's say this house is no longer worth $200,000, but now this house is worth $100,000. I'm still getting $1,000 a month in cash flow. Just because the house is now worth $100,000 doesn't mean I need to sell it. I have my tenant still paying me rent. So now because I have rent coming in, I don't have to be concerned about the value of the portfolio because I have a way to extract value from it. I have a way to get something out of this asset. It's still producing cash flow every single month. So I can write it out. I can afford to play a much longer game with this asset. Now, during the bear market, this home is worth $100,000, but I'm still in it for $200,000 because I'm producing cash flow and I'm setting cash aside during this bull run in preparation for the bear market. I'm going shopping now in the bear market, and the goal is to reduce my cost basis. My cost basis for this property is $200,000, but now it's worth $100,000. If I get another property that has the same specs, if I get another asset that's exactly the same as the first property that I bought for $200,000, but now I get it for $100,000, right? Now my cost basis per house, instead of it being $200,000, it's $150,000 per property, right? Because now I bought another property at $100,000 at a discount. During the bull run, this property is worth $200,000, but I got it for a discount at $100,000, right? So let's say I do that again. Now, instead of having a property for a cost basis of $200,000 per house, right? Now I have 3 houses. I'm in these 3 houses for $400,000, right? Now my cost basis for each house is now I have 3 houses, right? Now I went from being 150 to now it's like 125,000, right? Something like that. I'm not good at doing math off the top of my head. But anyways, let's say I got another property that's worth $100,000. Now I have 4 properties, each worth $100,000. One of them I'm in it for $200,000, but the other 3 I'm in it for $100,000. Now my total cost basis for my portfolio is $500,000. Now 4 properties at $500,000, and it cost me $500,000 to acquire 4 properties. Do the math on that, right? I'm reducing my cost basis per property because each property now, I know during a bull market is worth $200,000. So by reducing my cost basis, now even if the market rallies a little bit, I'm going to be in profit. So that's the goal with the bear market and why I actually get really excited about the fact that asset values are down right now, because this is a great opportunity to reduce my cost basis across all assets. All right. The focus is accumulating more assets during a bear market, blue chip assets, because if you reduce your cost basis, now even if the market rallies just a little bit, because your cost basis that you're reducing is under market value, now if the market rallies a little bit, you don't need it to rally a ton before you go back into the green. Now, because I can only think long term like this if I'm producing cash flow, if I have a means by which I can still extract value from the assets. This is how I look at the blockchain. I'm building a digital real estate portfolio of cash flowing assets on the blockchain, right? I'm looking to produce cash flow first. I deploy my capital where I can earn a yield, where I can get good cash flow, right? And assets that I want more of. Now, during the bear market, I'm taking that cash flow, I'm using it to accumulate more and more of those assets to reduce my cost basis across all the assets in my portfolio. Why? I'm preparing for when the bull market comes. I don't need a crazy rally to be extremely profitable during that time. And because I bias cash flow and made that my priority, I can now look at my portfolio with a long-term perspective, not concerned about the ebbs and flows of the market, because I have a way to consistently extract value and then take that value and take that cash that I'm extracting from those assets, use it to accumulate more assets, reducing my cost basis, properly positioning myself and strengthening my position on the board for when the rally comes. If I wanted to exit and take some money off the table, I can do so quickly during an early bull rally. Hopefully you find that helpful, and hopefully you start to think through a little bit more strategically when you're analyzing, you're looking at some of these assets, you're looking at some of these opportunities, really understand the difference between the bear market and the bull market and how to play the game and what you're looking at for each market. That's really going to help you prepare yourself for the things that are going to come in the market, and is going to help you properly position yourself to survive the ebbs and flows and look at it with the long-term perspective. Hopefully you found that helpful. I drop a lot of things like that. If you want more information, if you want to get early access to articles that I'm posting, videos that I drop that aren't edited for a podcast, go ahead and join our community. We have a community on Facebook. Love for you to check it out. Go ahead and join that community. That's where I'll be posting articles, blog updates, podcast episodes, and different notifications, just so you have a better awareness of what's happening and how to properly strengthen yourself to be successful. Till next time. Deuces. If you found this video helpful, chances are you're going to find a ton of value in our Boring Money community, where I'm in there live, actively sharing articles, market updates, and just educating you on what's going on in the market real time. So if you don't want to wait for another one of these episodes or another video training to come out, and you want to have live updates on what's happening in the market, go ahead and join the Boring Money community, where you can have access to us and be able to ask any questions that you want, and potentially even get featured in an episode. Till next time, hope to see you on the inside.